Good morning, everyone, and welcome to Quantum Leap morning market preview and trade plan setup for Monday, September the 16th, 2013. My name is Doug McKay. I am the moderator of Quantum Leap. Quantum Leap is a self-organized learning environment. We've been around for about 4 years. We have a private Skype chat room. If you're interested in seeing the Skype chat room, you'll need a Skype account. Come in and send a contact request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or you could email me, dm@m4connects.com. What we're going to do this morning is we're going to go through our normal morning routine. We start off with a macro to the micro view. We review the numbers first, and then we go into just some basic chart trending. And then we get into the in-depth analysis. So if you're watching this video after the fact, you couldn't skip ahead on the video, but we won't stop doing the numbers and the macro to micro, because this is what prepares us, and it is our morning routine before we get trading. Before we get started, of course, we've got to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see inside of Quantum Leap are for education purposes only. Please trade your own plan and do your own due diligence. All right, so obviously the big news, overnight, and hopefully you guys got my Twitter or my post in the Quantum Leap room that I was expecting a pop on Sunday night due to the fact that Russia and U.S. Came to an agreement with Syria. The cherry on top was that Summers has removed himself and is not in line for the head of the Fed. So we're probably looking at Yellen as the top candidate, and she's very dovish. So you're probably looking at no tapering coming anytime soon. Of course, don't forget, we still have the situation in terms of the debt ceiling coming up in mid-October, I believe. So, I'm expecting a little bit of a pop here, and we'll talk about that. But first, we got to get the numbers out of the way. So, our year high, on the September contract is still that 1705. We came up to 1703.75. We didn't quite take it out. I still think it is in danger. Of course, our adjusted high at 1698.75 or 1698.50 has been taken out, so we're actually trading new all-time highs. And of course, now that we're above, the composite, profile, we don't have a lot to go on, so we have to really go on, other measured moves, etc. I'm going to talk about that as we get deeper into the session. So 1705, still the target above. We're way above our year lows and our year open. We opened the month at 1640.25. We have a high now up at 1703.75. This was done last night, so we haven't made the adjustments yet. Howard doesn't like to make the adjustments until the day following. He doesn't look at the overnight. Month low is 1630.75, so we're plus 70, approximately 70 points above. I don't think that's in any danger. Previous month open 1685.50 is a number I would keep my eye on. Our previous month high 1705. Previous month low 1624.75, and we closed at 32.25. Our week open last week at 1652. We had that high that we put in last week at 1684 and the low at 1652. And then we closed at 1682.75. And of course, we're above that right now. Going into the intraday, Friday Globex session opened at 1678.25. We had a high of 1680.75 and a low of 1674. We opened the RTH session at 1679.25. We had an open auction in range Howard is calling in a normal day. Now here's a weird situation that we had, and I talked to FT71 about this. And even though we broke the IB after the and broke it in the extended session, or the after the 315 Central, he's not putting it into the 2%. So it's kind of a gray area. You don't see this very often. So I think that there was early news. Somebody had early news about the U.S. and Russia deal, and I think they ran it because of that. But we're gonna mark it as a normal day because the IB high and low was not broken before 315. Our opening swing high 1680 and a quarter, opening swing low 1677.75 for a 2.5 point opening swing, giving us that rotation clue to a rotation day. Our initial balance 1682 and a quarter, high 1675, low for a 7.25 point, well within that 6 to 9 point range, which is normal. Our 1230 number was higher at 1681. So other than this, this holiday rollover day, we've been trending up on the 1230 number. And all numbers in here are in Central. Our RTH high 1682 and a quarter. Our RTH low 1675. We closed at 1682 and a quarter. That's going to give us, depending on where we open, between 16 and 17 point gap this morning. So we got quite a large gap to contend with. Our RTH VPOC shifted up at 1680.50. Our range for the RTH 7.25, full session 8.25, and Globex at 675. We're still in that consolidation mode, as we talked about on Friday morning. We were looking for rotation within that balance between around that 80.25, 80.50, and 78 and 75. And then we just we had that slightly upper. My target above was 83.50 with a possible extension to 84.75, and maybe the equalization to what was the former microcomposite at 86.75. Our full session high 1683.75. Our full session low 1674. Our RTH 20-day range 13.5. Full session 16.25, and Globex 9.25. Our open last night, 1693. We had a European cash close at 1680.50. That's right at that microcomposite VPOC, the balance we just popped out of. Our value area high, 1681.50. Value area low, 1678.50 for a 3-point value area. And we're not calling a IB break, so we don't have our time study. Our extended session high, 1683.75. Our extended session low, 1682.50. And we had settlement at 1682.75 for a 1.25 point extended session range, just shy of our 20-day ATR and the ETH at just under 1.5. And we had somewhat light volume, 951, 722, and just over 1.1. And of course, we saw late in the day the migration from the September over to the December contract. So going over to our daily report, we had Empire State Manufacturing. We've got capacity utilization and industrial production at 9:15 just before the open, or 8:15 Central, sorry. In terms of the volume profile, there's really no new numbers above because we don't have any, so I didn't make any real adjustments. I made a couple adjustments. Significant LVN, which is way below us right now at 1677.75 for yesterday. In terms of naked crosses, for those that are new in the room, naked crosses is a study that I've been doing for a few years now. I use the 9 EMA and the 20 SMA, and when the 9 crosses the 20 and price moves away and leaves that unauctioned or naked, We look for those as targets. It has a very high probability. We track the 5, 15, and 30. You can go do your own research on it, but you'll find that if you look on your charts, it's very rare that you have a naked cross that's left for any length of time. So we took out the 2 at 74 1/4 and 74.50 on the 30 and 15, and we added at 16.80.50. Now there's a few more that we've got to add in from the overnight session, and we'll put those right on the chart. Our naked VPOC we took out 1678, and we added the new one at 16.80.50. So next thing we like to do is go through and do a macro to micro. Where are we in our trend? So we start with the monthly. This keeps our, keeps us in tune to not get biased, and this I think is, helped where everybody was trying. We had all the talking heads trying to call a top, and we kept saying in here day after day after day, the overall trend is still intact, and we're simply going through a minor retrace. So you can see that we've got good slope and separation on the 9 and the 20. Price is paralleling the 9 quite nicely, and we are trading at the high distribution from the previous month. So very much the trend intact. Now the interesting scenario is when we go to the weekly, because the weekly we were watching as a possible head and shoulder pattern, and we haven't come up and broke it yet. But we came awfully close, so we'll have a ascending right shoulder if we come down from here and complete this pattern. But the overall trend on the weekly, we've got slope and separation again. We only came down and closed 2 weeks ago or 3 weeks ago now below the 20 once this whole year. So this trend is still very powerful, and I'm thinking, I'm getting more convinced that we're likely to see this blow off top that we've been expecting and invalidate this pattern. But you don't know. I don't have the crystal ball, so we got to keep our eye on it. Going to the daily, you can see that we've got slope and separation now. We came down, tested the 9 EMA, and then we gapped up. And we've got a naked cross. This is a good example of a naked cross on the daily down here at 1652 and a quarter area. So 1652 and a quarter, 1653 thereabouts. On the dailies, they're not as exact. So that's an area that I'll be keeping my eye on, and I'll show you why when we get over to the, let's go there right now. So I was taking a deeper look at this over the weekend, and we've been following. I posted this in Twitter and in the room, I believe, on Saturday as well. You can see that the overall fork that we've been watching long term, we've now we're coming up to test it from below again and seeing if we can get above. The new modified shift that I added a couple weeks ago, we came up and we tested it, and then fell back down. Tested the, usually when you get a breakout, the downward sloping fork the opposing fork that we've been watching, we've been trading inside of from the 1705 high. We broke out of it. Now we came down and tested it from above, and we came down and tested it right where the 9 EMA is on the daily as well. But now we've gotten back above these, we've gotten out of the downward sloping fork. We're coming up and we're inside of the long-term fork, and we're above the center line of the upward sloping fork. So I'm watching first of all of coming down here and testing the center line of this modified shift fork down here at around the 1689 and seeing if we hold there. If we stay above the center line of this fork, now I'm looking for a move up to test the upward line of the modified fork, and that's going to give us a move up into the 1740 area, and this is the first target that I have above. Of course, if we go up and now that we're inside of the long-term fork and we go up and test the center line of the longer-term fork that we've been watching, well, that's going to give us a move up to into the 1800s. But we do have an interesting energy point right here that is going to be in around that 1670 or sorry 1780 area, 1778, 1780 area. So that is definitely a target that I've got my eye on above, if we get above that 1740, and probably sort of move sideways and up towards this energy point. If we fail and we get back below the center line of the modified fork, we've got another energy point that's created with the opposing downward sloping fork down here in that 1652, 1653 area. And remember, that is a naked cross on the daily as well. So that's got some confluence down here. And if you look at it on the volume profile, it is a CHVN down there as well. So I think that our failure point and our retrace is going to give us a test down into that 1652, 1653. Let's take a quick look at the trend on the intraday. Well, we had gotten below the 9 and the 20, and then we came up. And just at the end of the trading day on Friday, we got above the 9, and we got we were closed right at the 20 SMA, and we've got a naked cross right there at 1683, 75, 1684 area, and then we had a gap. So we have a gap. We have a gap up. We have a technical gap that we created. Okay, a technical gap is when we price moves away from the 9 EMA and creates this gap. You can see that when you get a technical gap, it is either closed by time or by price or a combination of both. And we've got a fairly decent technical gap with a gap up as well. So I mean, a test down to test this gap and test the 9 EMA above is going to be somewhere in around that 93, 94, 92 area, which is going to be approximately, depending on where we open, about a half gap fill. So this would be a normal half gap fill and a technical gap fill. So I thought that's kind of interesting. But the overall slope and separation trend's looking strong until we get below the 9 and come down and test the 20. To me, the trend is still looking like it's going to be upward. Going down to the 30-minute chart, well, we got the big gap up. We had a foo bar with a Mr. Sneaky, and now we're coming down. We couldn't get below that 1697. I was looking for a possible test of the Keltner center line at the time last night when I went to bed at 1698 and a quarter, 1698.50. We have come down below the 9 and the 20, and we are trading now below them. But we're kind of in a consolidation mode here, and I still think we're coming down to close the gap. Going over to the composite, well, we're sitting right above, that adjusted December high at 1698.50, and if we get back below and inside of the larger microcomposite that I've got drawn, I'm anticipating coming down and testing. We gapped above this naked microcomposite VPOC at 1695 and a quarter, and of course we've got that 9250 CHVN just below it, which is going to be roughly your half gap fill. The smaller microcomposite within the bigger microcomposite, where we are trying to hold value after making the new all-time high, we tried to hold value for the first couple days right here at this 1695 and a quarter. So if we get inside of this this composite and inside the larger microcomposite, the first level you want to keep your eye on is 1697 and a quarter. That is the value area high. We've got a microcomposite LVN at 96.75, and once we're inside of that, then I'm looking for the move down to 95 and a quarter. But want to watch for buyers possibly stepping in here at the value area high of the smaller microcomposite and the shorter price rejection and LVN, microcomposite LVN at 1696.75. Once we're inside there, the other side of balance around that 95.25 is the 91.75, again just below what would be a half gap. Get below that, the lower value area down here is 1689.75, and then we're getting into the next area, or the next balance area that we tried to hold once we fell out of that balance, and back towards the overall microcomposite. Remember that this microcomposite, the larger one that goes from 718 all the way through to 814 when we really fell out of balance, the microcomposite VPOC is 80.25. That was that 86.75, which was my extended target on Friday, which would have given us the equalization between the September and the December contract of the two microcomposites, the new one at 1680.25, the old one being 1686.75. So 1686.75 is still a number that you want to keep your eye on if we get below this 91.75. Value area high for the overall larger is 85.75. The value area low is 73.25. Again, I'm not expecting a big pullback. My targets below are going to be in this 91.75 as the other side of balance. If we get below that, maybe a little bit more of a gap fill towards that 86.75. But if we get below the 87.50, we could come down all the way down to test this 83.50. It's still within our ATR targets. So keep that in mind. And then the big number below, of course, is going to be this area that we found balance in at around that 80.25, 78.50, and then the microcomposite VPOC. Now, the overall 4-day microcomposite VPOC is 16.75, but as we inched our way up, it shifted to 78.50, and then what we really left was the last most accepted price before the gap up, before the rally, is that 80.50. So it's the big number that you really want to keep your eye on. But once we're down here, then we can come down and start playing ping pong again between these three undetermined value areas of 75, 78.50, and 80.25. Of course, the big line in the sand below, way below us, is still down here at that 1665.75, but I don't think that's going to come and play today. And that will bring us back into this balance area that we gapped out of and came up here. So we've got another two gaps up. So are these mid gaps, or are they exhaustion gaps? We won't know until we find out, right? Anyway, that's everything I've got for the ES. Howard, we'll go ahead and move over to you, and then we'll come back and take a quick look at gold.
Thank you, Doug. So taking a quick peek at the weekly chart, we see the gap up from last Friday's close, and we didn't quite hit the 1705 level. It came close, and what we've been talking about is a possible wave 1 down and a wave 2 up. That hasn't been invalidated yet until we exceed 1705, but the probabilities are decreasing rapidly as we approach 1705 that this is a wave 2. Instead, it looks like this move down may be a correction, and that we're likely to exceed this level and make an new all-time high. Now, this white line here represents the median line of a 20-year fork, and we came up and touched it for a couple of weeks, came back down after rejecting it. Now we're coming up for possible another test of it. And that would be around 1713, 1714-ish. So we'll see if we get to that level, how we respond there. So now let's go ahead and look at the daily chart. So we can see that line up here as well, and we can see the gap up. We have our 9 EMA now crossing above the 50 SMA after it had crossed above the 20 SMA. So, that again is indicating our trend has come back up. And what looked like the beginning of a wave 2, we had a lot of choppy, overlapping waves, which is characteristic of a corrective pattern. But since then, we've had some very strong moves higher and continue to do so. So even though the wave 2 hypothesis is not invalidated, until we cross 1705, it's looking much like it's something other than a 1 and 2 wave combination. So we'll just see how we respond in this area. And if we do get above 1705, that hypothesis does become invalidated. So looking at market breadth, we have our on-balance volume, and last 11th of September, we did create a higher high, even though we didn't have a higher high in price. So on-balance volume is showing more strength relative to price at the moment. Now let's look at the transports versus the industrials. And everything is still in sync here, has been all year long, where the transports have shown more strength than the industrials. So we'll see if maybe show a strong day today if the transports actually widen their gap over the industrials or not. Looking at the sectors. So it looks like energy is the only sector that did not move up over the last couple of days. Looks like all the other sectors have been moving higher, so a lot of convergence among the sectors. Technology also lagged a bit, but did move slightly higher. That's this yellow line here. Retail is managing to hold on to its lead after coming down closer to the pack back here. It's been rallying since then. That turning point was on August 27th, pretty much at the same time as price started moving higher. Looking at our advanced decline versus up-down volume. So on the 13th, we did have a bit of a higher high, but advanced decline and up-down volume, this is the advanced decline method here on a 10-day average basis. It was pretty much flat, and the NASDAQ was actually a bit lower. Similar story on the up-down volume, where the NASDAQ was a bit weaker. So on a 10-day average basis, these two indicators did not go higher with price. So after today, since we had the big gap up, we'll see how they respond to there. Now, as we've noticed in the last couple of swings, we had a higher high, or the high set by both indicators back on July 9th, well ahead of price. And similarly, we had a bottom set in these two indicators back on August 19th, well ahead of the turn in price. So these have been good to give us a clue when market tops or bottoms, at least on an interim basis, are getting ready to form. So we'll see if this becomes an interim top here on the advanced decline or up-down volume or not. One last thing, let me open up my homework sheet, take a look at our Commitment of Traders report. So what we see here is the Commitment of Traders report for the ES. And in yellow here, that represents the small specs, or the retail traders, basically people like us. And they have been getting long over the last several weeks, increasing their net long position. This past week, they slightly loosened up a little bit on their long position, but not much. And we can see that the large specs here in blue have actually been decreasing their long position and actually are now slightly net short. This line here represents the break-even line, and we broke just below it, so that large speculators are now slightly net short. And the magenta line here represents the commercials, and they've just been moving sideways for the last couple of months and are net short. So, Doug, that's all I've got. I'll turn it back over to you.
Thank you, Howard.
It's like about 12 minutes to open.
Yeah, I was just going to send you a note. We're going to watch the time because I still got to move our numbers over to our trading chart. Okay, so overnight we have a high of 1703.75. My screen showing?
Yes, your chart showing.
Okay, 1703.75 overnight high. Overnight low is going to be 1692. And our VPOC going into the RTH session, overnight VPOC is 1699.75, basically right above us where we're trading right now. We have a naked cross down at 1680.50 on the 5. And that's right at our naked VPOC from yesterday, or Friday, I should say. But we don't have a lot to go on right here. What we do have to go on is what we have in the composite. Of course, 95 is going to give us a target down here, 95.25. I don't know where this number is coming from. I'll have to go and see what's might be pulling that from. You have to see why my adjusted numbers are still pulling in naked microcomposite VPOC. I wouldn't pay attention to this. This is probably some type of a glitch. We've got the CLVN at 96.75. This is going to be an area that I'm going to trade. Looking for a move down towards that 95.25. And then, of course, the target above is the 1705 still. And I really don't have areas up here that I can trade off, so I'm going to have to try to trade off of what the market is developing in terms of intraday profile. Taking a look at the Keltner channel, Keltner with the Renko. Oh, that's why I've got naked. That's probably why I've got a naked VPOC right here. I've got a data issue going on, so I got to do a full download. We still got 10 minutes, or about 8 minutes. Well, that's going on. I wasn't planning on keeping the room open, but we're not going to have time to close this room down and open up the level 2 room for the live trading. So I'm going to just leave this room open, I guess, for the time being. If you're interested in finding out more about Quantum Leap, again, you'll need a Skype account. That's where our chat room is. And then if you want to get more information, send me an email at dm@m4connects. If you want to talk to me directly, you can give me a call, but if you email me, I'll call you. And my direct line is 519-250-5530. We have 3 levels of our room. We have our main chat that includes the QLTP sheet that we put out each day. This QLTP sheet has a ladder above the previous day close and a ladder below the previous day close, and it has levels based on several different methodologies: volume profile, key number, Pearson pivots, Elliott wave, Fibonacci, and just so that you have a guide to where. It's not telling you how to trade, it's telling you where targets are, where there's confluence between different methodologies, and of course, where different traders using the different methodologies may activate and get involved. Has your news for the day, a little working area, and this is posted into the Quantum Leap room on a daily basis. The level 2 is the actual live trade room that usually we don't have open. We have had it open the last week. I wasn't planning on keeping it open this week, but we'll keep it open today. The test of the Keltner center line is going to give us a test of that 1700.25. The upper, if we get above the center line of the Keltner, we should go up and take out that 1705 target. The upper test of the Keltner is 1706.25. If we stay below and we continue to bleed off and come down and close the gap, test of the lower Keltner is going to be 94.25. This is a Renko chart, with a Keltner channel on it, and this is this is my trade. This is what I watch to trade from. How to make my decisions. I keep my composite, my Renko, and then my intraday profile. And then the other charts I keep on the other page, and that's simply I watch the 15-minute on the ES, the 15-minute on the Russell, 5-minute on the bonds. I keep an eye on gold. Gold right now, let's take a quick look at it while we've got a minute. Gold's come down here, and we're creating some balance down here, so I'm going to draw a new microcomposite to start on these 2 days right here. We're trading around balance at 13, 18. If we continue to if we get back up above that 13, 17 area, the LVN that we were talking about as a defining line below, I would expect to drift up towards this 28.80, which is the most accepted price before we gapped up. If we continue to drift down, come down, look for that 13.14, which is the most accepted price in the last 2 days. But as you know, the big target below is that 1284.90, which is the microcomposite of the larger balance area that we popped up. We've got a double distribution here, so you want to keep an eye on 1311.40, and then up here at 1329.28 area in gold. Again, I'm not really trading gold right now. I'm waiting for gold to come back up a bit before I start trading. That's going to conclude our morning session. As always, trade well, trade safe, and we will catch you on the flip side.